Welcome to this meeting of the Audit Committee. My name's Stuart Ritchie. I'm chairman of the committee. The agenda has been published in advance, and we're going to take that as our running order for this evening. First item is apologies for absence. I'm pleased to say all members of the Audit Committee are present. Second item is minutes. These have been previously circulated. All members of the Audit Committee in agreement with the minutes, please.
Agreed.
Thank you very much. Item 3, declarations of members' interests. I take it there are no declarations. I can't think of any, but it's really your own call, members of the committee. No items declared. Item 4, announcements. Glenn can speak in a moment. The only thing I want to say about what's on the agenda tonight is you'll see we've brought back the annual accounts. You'll remember we discussed these back in July, and there were several matters which still needed to be resolved before the audit certificate could be issued. Those have now been resolved, and although we had delegated authority to sign the accounts, I felt the timing of this meeting, it was appropriate to bring the accounts back to members. So it won't be a complete run through on the accounts, but rather I'll invite Dominic to explain what changes have been made. Then we can move to approve the accounts if we think appropriate. So for that, I think the only other thing to note is the deadline for completion of local authority accounts was extended by 4 months to the end of November. So we're now well within the revised deadline for filing on time. I think that's right, isn't it, Jane?
That's correct.
Thank you very much. Glenn, do you have any announcements?
I don't have any specific announcements, Chairman, but I'm happy to deal with any issues that people want to raise either now or in the meeting, as you wish.
So my suggestion is we pick up things with Glenn as we go along. If at the end of the meeting people feel that there's something else they'd like to ask the Chief Executive relating to the finances, we'll take that at the end, if that's okay. Thank you very much. So item 5 is risk management quarterly update on pages 9 to 20 to receive the report of the Director of Corporate Resources.
Thank you, Chairman. What I'm presenting today is the usual risk report, but sadly, again, as it was in the summer, we have far more risks deep in the red zone than we would normally do. Just to draw your attention to what those are. Obviously, we remain concerned about our funding from government. We're always concerned about our funding from government, but at the moment, given the rest of the impact on our budget, it's probably slightly worse than usual. We have the CRR 19, which is the relatively new risk, which arose from our massive loss in fees and charges during the summer, but also our increases in homelessness and the very high cost of leisure centres. To give you a feeling of proportion over those losses, we're still round about between £4 and £5 million lost this year so far, or we're expecting that by the year end, of which around 75% is made up of losses from parking and losses from leisure centres and the extra money we've had to spend on those. More about that, obviously, at the next Finance and Assets PDAG and running into the next Cabinet meeting where we'll have the MTFS. We have the risk from COVID of not being able to provide our frontline services. If we get, I would say, if we got a second wave, we appear to be in the middle of, or the beginning at least, of a second wave. We know infections in Horsham area are going up. At the moment, our workforce isn't affected, but as the Office of Business Continuity for the Council, I am continuing to run a group that deals with that and make sure that we monitor our workload and the colleagues and staff we have available to deal with our most critical services, at which at the top of the list, I always put refuse collection. Decrease in rateable values due to appeals and businesses going under. I think possibly some businesses have their eyes off appeals at the moment. Now is probably not their main focus on appeals, although some did appeal arising from the business grants which were related to rateable values this year. So we did have some appeals there, and actually we probably ended up with slightly more businesses coming onto the register because of that. But the number of businesses obviously going down and likely to go down as furlough ends, as the recession runs through the winter, will obviously get higher and of more concern. And then finally, we have the risk from a malicious attacker. There are people still who sit around the world trying to hack into systems and throwing out, I don't think many people are trying to specifically target Horsham district, but they throw these things out generally as ransomware attacks. And there are councils in this country who've been frozen for a very long time due to this. That appears to be rising, hence it being in the red. I'm happy to answer any questions on the risk register.
Members, do you have any questions for the Director? Ruth, please.
I have a rather sort of layperson's question here, which is, when does a risk stop being a risk and just start being reality?
Probably when it's in that top right-hand corner. The certainty level in these levels, and strangely, actually, our summary box probably isn't the clearest because it doesn't tell you all the details there of what the levels are. But once it gets to the far right-hand side, that means it's definitely happening and we're in it. Some of the others are slightly lower down. And then the height is about how much money we lose. Our money loss one, and the reason so many are sitting in the top is that top box is over £500,000, which of course with the sort of money we're talking about this year has pushed a large number of those risks up. So once it's in the red, but particularly in the far column, you know, it really is happening now, but the risk continues that it could get worse. I wouldn't like to say where our finances might be by the end of the winter.
Yeah, and I could add something to that if it would help. I guess to some extent it depends on the nature of the risk, because the whole point of this exercise is to identify the risks and to put some mitigations in place. So Jane's quite right. The ones that are in the top right have got a high likelihood of happening and a high impact and very difficult to mitigate. But by their nature, some risks will be short term. Other risks would be medium term and others long term. The COVID one is going to be with us in the medium term. Hopefully it's not a long term risk, but you would envisage a day where some of the impacts of that are lessened and the risk is much lower. So it really depends on the risk, would be my view.
Yes, I would like to challenge the idea that the rate is going up here. Looking at the figures for this postcode, in fact, it's coming down. We have less cases, and I do think we have to look at the nature of the society here, which has been very disciplined in its social distancing and all the other things that we need. And so I wouldn't have thought the risk here is going up in the same way as it obviously is in other parts of the country.
Chairman, I could give some insight into that. I sit on the COVID Strategic Coordination Group and looking at the risks. And I guess my comment would be, it depends on what you mean by postcode. If you look across West Sussex, the rates are increasing, but we're still in that medium risk. The risk categories, or the risk tiers, start at medium, go up to high, and then very high. So we're still low. Compared to our colleagues in West Sussex or other districts in West Sussex, we've got a higher rate, but I think Councillor Blackhall is quite right. There'll be particular postcodes within our district which by their very nature are very low, and other parts of the district where there's a concentration. But the figures are aggregated, and if you've been watching the news and the shenanigans in Greater Manchester, the tiers are applied based on a wider area basis. So just because particular parts are very low risk because of their nature, they could still be in a lockdown because of other parts of the district.
Thank you. Anybody else want to come in on this point? Very good. Thank you very much, Jane. I don't think there's much else to be said, really. I think if we just go back, we are invited to consider this document, and I think we have duly done so. And it's quite clear that the items that are in the top right-hand corner are getting huge amounts of attention throughout the whole of the council, both officers and members. I'm not really sure there's much more that we need to say in this forum, because I think we tend to sort of look back at things, whereas in other places in the council we tend to be looking forward. So I think, unless anybody disagrees, we should just leave it there for now. So on that basis, we then move on to item 6, internal audit, quarterly update report from the Chief Internal Auditor, pages 21 to 32. Before I invite Paul to speak, Andrew, welcome to the meeting. I noted you were 2 or 3 minutes late, but we were given fair warning that you were on another call through to about 5:30. So thank you.
Thank you, Chair. I was talking to the National Audit Office, so they let me go broadly on time. So thank you for that.
Very good. Paul.
Thank you, Chairman. So the Q1 report summarises the audit reports issued for the period 1st of April to the 30th of June. And during the quarter, we issued 2 reports. First one was the budgetary control report, for which we gave an opinion of reasonable assurance. There are sound controls in place in terms of the monitoring and forecasting processes, but we found a few areas of non-compliance in terms of budget holders not submitting their returns to finance, and a few instances where forecasts were provided without sufficient explanations. Budget holders have been reminded of the importance of timely and accurate returns, and SLT is continuing to monitor performance closely on a monthly basis. And the second report was a non-opinion piece of work, which was commissioned by the Director of Corporate Resources shortly after the commencement of the COVID-19 lockdown. So we were asked to review the Council's response process for providing assistance to vulnerable residents in the district. And we worked closely with the Head of Housing and Community Services and helped to improve financial controls and mitigate potential risks to safeguard the Council against potential financial losses. We concluded that the Council had responded well to the unprecedented situation, providing an immediate response to vulnerable members of the community. The response from the Council to support residents of the district throughout the pandemic has been efficient and effective. I'd like to bring members' attention to a few amendments to the original audit plan, which are in response to the COVID-19 situation. These are listed in section 4 on page 30 of your pack. We have deferred the audits of the Capital Bar and Catering Facility and use of volunteers, which will be considered for inclusion in the 2021-22 audit plan. And these audits have been replaced by the COVID-19 Red Response Review and a review of purchase card controls and spend. And finally, you will see that all of our performance indicator targets have been achieved for the first quarter, with the exception of the productivity and process efficiency indicator. The picture at the end of September is showing a significant improvement, largely around the constraints from COVID and so forth. But I just wanted to provide some reassurance to members that this is not an area for concern, and we're back on track at the end of September. happy to take any questions.
Members, do you have any questions? Ruth.
I note the deferring of the volunteers and the capital bar audits for very obvious reasons. Just really a question about volunteers. When we had the first wave of the COVID, we had a huge number of volunteers who came forward. And I think it's probably fair to say that we too many for us to cope with. I'm just wondering, in the light of that and what may be happening over the winter, what thoughts officers or the auditors have on whether we should be again looking at looking at volunteers.
That question came up at our senior leadership team this morning, and Adam Chalmers, who's in charge of the volunteers, says that he's confident that we have all the volunteers we need should there be any further lockdowns.
Which is excellent to hear. I suppose I'd just like to sort of throw in a note of caution in that it's great when you get enough volunteers, but when you get too many volunteers, you can get disillusion. And just that, you know, we obviously don't want to sort of sour any future calls for help. So it was just really to think about the volunteers who don't get called on as well as the ones that we do.
Chairman, I could add something to that as well. What is true to say, we were inundated right at the start. There was an overwhelming response from people wanting to help where they could, particularly around those shielded groups and the community hubs. What we've found is the nature of our volunteers has changed over the course of the last 6 months. Because if you think about it, quite a number of our volunteers were in a particularly vulnerable age group. And some of those, for obvious reasons and for their own personal safety, are now not as active as they otherwise might have been. I might add we have the same issue with manning elections as well, which is something we're planning for in May. So I think we will be able to use the volunteers we've got, because whilst there's not an overall shortage, I don't think there's the huge excess that we had initially because of that factor. There's been some compensation going on. And it's made us think about how we engage with those volunteers as well.
Thank you, Glenn. Does anybody else have any points for Paul Miller? Then I'm just going to raise a more general question for you, Paul, which is, prior to Orbis, you were directly engaged by the District Council. Your internal audit function is now provided through Orbis, who has its own, if you like, methodology and approach, and it won't necessarily have been the same as the approach you were working with before. How are you finding that change in terms of the work of yourself and your department? Do you sense any sort of change in tone around what you now do compared to then, as opposed to now?
I guess it is a challenge with different auditors coming in from different organisations, and that has been a challenge because they're coming from, as I say, different organisations, different cultures. The Orbis authorities are Surrey County Council, East Sussex County Council, and Brighton Hove City Council, so they are very large authorities. But we follow the same approach that we did at Horsham. There is perhaps an issue around risk appetite. Maybe the risk appetite is changing a little bit at Horsham because of the magnitude of the financial situation at the moment. And my role, my responsibility is to act as a filter so that when we make suggested actions to mitigate some of the findings, that they are proportionate. And I've been having a conversation actually in the last 2 weeks, several conversations with Russell Banks, who is the head of Orbis Internal Audit, just to see how we can perhaps approach things slightly differently. And one of the things that we try and do is not make suggested agreed actions. So we leave the agreed actions to the client, so to the head of service or director that's leading on the client side, and then we just review that and sense check it. If we feel that the level of risk is perhaps too high and it's been accepted, we would then escalate that up up the line to Jane or SLT. Does that kind of answer your question?
I think it helps. I think my concern would be sort of reflecting on how Horsham fits into the matrix of Orbis's clients, if we can describe them as such, is that you talk about East Sussex, Surrey, Brighton and Hove, all of which are much larger organisations. And therefore, it seems to me that the delegation of responsibility down the line through line managers to people making on the spot decisions is much more prescriptive. And consequently, those kind of organisations tend to be less light of foot, if that's an expression that's understood. And if we end up with an internal audit approach that treats Horsham the same way as it treats East Sussex, I'd be left concerned that internal audit wouldn't be listened to as carefully as perhaps it has been in the past, because the suggestions that be coming back would be too prescriptive.
I don't see that there has been any change in the approach. Not quite sure how to answer that one.
It's nuanced, Paul.
Well, maybe I can help a bit with the view from management, Chairman. My view of audit was and remains that it's part of the system of internal control that's used by management to fulfil their, well, in a company, fiduciary responsibility, but statutory responsibilities, I guess, in the public sector. And I guess it's always been the case that even when recommendations are made, it's really up to management to look at those recommendations and to say, let's assess the risk posed by the issue that's been raised and what is an appropriate and an affordable control in the circumstances. So it's clear financial circumstances are changing, and the challenge for management is to make sure that that doesn't lessen the control that goes on. It does mean from time to time that we would adopt slightly different controls, because in the old days you could have significant segregation of duties on every single thing and you have the numbers to do that. You may find more management review and detective controls, but I mean, there's a reasonable example. We specifically asked the audit to look at the well, we set up new services from scratch within a few weeks to deal with the COVID crisis, and inevitably it was a case of act now and ask for forgiveness later. So we specifically looked at that area, and there were some minor issues around authorization of payments, because we were giving wardens and others cards to be able to go and buy food, because we were dealing with a very real issue with vulnerable people. Now, at one level, you would say, from a segregation of duties viewpoint and a preventative control, that was really, it wouldn't be absolutely best practice, but we followed it up and we reconciled all of the payments. And I think we had a difference of about 20 or 30 pounds from the things we took on board. So for me, it's horses for courses. And the other thing I would say, what Orbis has brought is, with that bigger mass, there's a whole range of specialist auditors which can be brought into the organisation to look at specific issues. So some of the IT auditing. So there's pros and cons. But I recognise the danger you're pointing out. What we don't want is just a generic approach. We want an approach that's sensible for Horsham. But I feel we get a reasonable balance on that. And Paul and his team, we've had some new faces, which I'm sure is a challenge for Paul to manage and can be frustrating because he knows us well. But I think audit's still working really well. I haven't detected a decline.
Well, I'm not suggesting there's a decline or even a potential decline, Glenn. I think the concern I'd have is that Horsham being a smaller organisation to, say, some of the county councils, allows officers to be more, if you like, flexible in how they get things done, on the basis getting things done is actually really important, rather than a scenario which was characterised in a TV series where typically the computer says no was the response. And so it's how, I suppose, when that discretion is exercised by Horsham District Council in its procedures, do the procedures get updated in a way that the flexibility is understood when internal audit come in and assess what we are doing, so that we're not measured against, say, the stricter procedures that might apply in a larger organisation where stricter procedures are entirely appropriate.
So my answer to that would be, from the management viewpoint, yes, because at the end of the day, it's down to us to make that decision. Audit's role in that is to give an opinion on what management's judgment is, but audit don't run our organisation. So we make those judgments and we have a conversation, and quite often we can come up with reasonable compromises. So the starting point might be more of a generic or based on a bigger, but I think it has worked well, and it's always good to have challenge. But we're quite robust in our arguments and our logic that we apply, and sometimes we would disagree, but we've never got to a point where we've had points in audit reports where we say that's ridiculous. What we have said on occasion is, well, actually we hear what you're saying, but we've got a different way or a different control, and we think that's appropriate. And by and large, that's been okay.
Very good, thank you. Paul, anything further, or are you content with the discussion?
No, I recognise what Glenn is saying, and yeah, I'll endorse that.
Very good. Jane, as director, content?
Yes, that's how it works. So a comment is made, we put in our assessment of how much risk we're prepared to live with, and that's what you will see in the reports.
Yeah, very good. Thank you very much. So I think that concludes item 6. Item 7 talks about the external audit, but I'm just going to jump ahead to item 8 and just invite Dominic and Sam, who are on this call, just to say what changes have been made to the accounts. I know they're relatively minimal, but there's 2 I've particularly got in mind, and I think it'd be very helpful if they were to explain the changes we made before the external auditor then speaks to their audit results report, because we are I'd like to think we're quite familiar with the accounts as they stand, having spent some time looking at them in July.
Okay, shall I very quickly sort of summarise that? And obviously I can invite Julian and Sam to chip in wherever necessary on the detail. There are two, as Stuart said, there are two main changes in the pension fund. So the work that was done on the pension fund audit for West Sussex had an impact on the asset that was in our accounts. So we have revised that down by the £823,000. So that's shown in note 30, but it's also on the face of the balance sheet in the pensions reserve, and it's also in the CIES as well. So there are several changes that have flowed rather through the whole set of accounts for the numbers that have changed there. That was an asset overstatement, and the auditor will probably explain in more detail how that happened, but obviously the impact has gone through our set of accounts there.
Sorry, Dom, just to clarify, that's a bit of information that came to us after our meeting in July. That's correct, isn't it?
It is, yes, that's right. So the work that the auditor has done since that meeting in July has sort of firmed up the adjustment that needed to be made for their work that they've done on the pension fund in West Sussex, as I say. The other change
sorry, Dom. Sorry to interrupt you again. If I don't mind. So if we go to the comprehensive income and expenditure statement, which says a surplus of 31.4 million, most of which derives from the actuarial change to the pension scheme. In the previous set of accounts, that was 820 thereabouts £1,000 more than it is now.
That's right, yes.
And consequently, the balance sheet is £820,000 less than it was back in July.
Yes, 823. Yeah.
Yeah, super. I'll stop interrupting. Please continue.
Okay, no problem. On the second point, that further work was also done on the going concern statement and the review there as well. There's no sort of significant changes on that. There are a few changes to the phraseology, I suppose, and a reference to 12 months after the signing of the accounts. So it's more sort of clarifications rather than any specific changes on our going concern. But that's in note 32 there, and as I say, not a significant change, and it's obviously gone through the external auditor's process for reviewing that in comparison for other authorities as well.
Very good. Right, folks, that sets the context. So, Andrew, over to you to speak to your annual audit report.
Thank you, Chair. So, I mean, just to I guess, connect with the comment that you just made. Obviously, at the meeting in July, we presented an update to our to the risks that we had identified during the course of the audit and our planned procedures. In terms of the report that you've got in front of you, we'll take that as read, and clearly we'll what I'm going to do is just ask Jack to talk through a couple of the highlights we wanted to just bring to your attention in terms of touching on some of the points that Dom's already made, but things that have happened since we spoke last in July. Dom, do you want to just sorry, not Dom. Sorry, Dom, didn't mean to surprise you there. I was going to hand over to Jack just to talk through those a few points.
Yeah, cheers, Andrew. So there's just 3 points really that we wanted to raise from the report. So the first is just on page 38, which just highlights that we've completed the audit effectively. The only thing that we're waiting on is just the signed letter of rep, which I know is on the agenda for later in the meeting, and then just the response from those charged with governance. So we should be in a position to sign the audit opinion tomorrow morning, which is obviously really good news. The second point I just wanted to highlight is on page 55, and that's just to highlight that we've got one uncorrected misstatement this year. That's in relation to property valuations. So that's just coming out of the work that our valuation team has performed. So the difference isn't material, so it doesn't affect our overall opinion. And then finally, just the third point I wanted to pull out was on page 46. So this is just where we highlight to you that the council valuers have attached the material uncertainty to their valuation this year, and that's due to the impact that COVID has had on the property market as a whole. So that's something that we've seen across the sector, and it's not just unique to Horsham. But because of that uncertainty, we're including an emphasis on matter paragraph in our audit report this year. So which again is just to highlight the disclosure the council's made over that uncertainty. So, just a bit of background, just to make it really clear that an emphasis matter paragraph isn't a change. So our audit opinion isn't a qualification. It's just an additional bit of wording that we add into our auditor's report to highlight our disclosures in the accounts that we think it's important that the users kind of read and understand. So that's kind of it in terms of the key areas that I want to pull out, and kind of happy to take any questions.
Members, any questions for the external auditor? So I suppose I've got 2 points. Firstly, I've left very uncomfortable with the external auditor saying they disagree with our property valuations, but then failing to particularize why they've come up with a different set of figures to the experts retained by the council in relation to its own accounts. And I can't think of any good reason why you wouldn't particularize your calculations. There's lots of practical and really good reasons why particularizing them helps everybody, because it helps to come to a better understanding both within Horsham Council as an organisation, with the experts that we retain in relation to our accounts. So in effect, to hide those calculations from us, I find really, really unhelpful. But for it to then lead on to an emphasis of matter paragraph, I don't find particularly acceptable either, because from everything I can see, and I work with a number of people who have extensive commercial property holdings, that they all completely understand that the values can move around over time. And there's nothing unusual in that. So I'm quite surprised at the necessity for an emphasis of matter paragraph.
So to be clear, the emphasis of matter paragraph relates to the valuer's own statement on their valuation of material uncertainty in the valuation report that they've delivered. The council have taken that into account and disclosed it, and it's disclosed within the accounts that there is a material uncertainty in the valuer's report. We've done work to ensure that we are happy from a true and fair perspective with the valuation of the assets that are held within the balance sheet, and the emphasis of matter paragraph is purely pointing at the fact that the valuers, because of the extremely unusual circumstances that existed at the 31st of March, have put a material uncertainty paragraph on their report.
But by virtue of your own work on the property valuations, you've come out with figures which are almost exactly the same as those produced externally. So what I don't understand is why, having reached that view yourselves, you find it necessary to hide behind somebody else.
I don't think we are.
The disclosure is presumably quite adequate to allow the readers of the accounts to form their own opinion.
So I don't think we are hiding behind it. We're pointing towards it.
Yeah. You've not addressed my first point.
In terms of, and maybe Jack can explain a little bit more about the process, but in terms of the details of the calculations, we have asked our valuers to look at the values of individual assets using their knowledge and expertise in order to come up with that. Where we've come up with differences, we've shared what those differences are and tried to understand what the background to those differences are. Often it's in terms of this is an area of estimation, clearly, so often it's in terms of the assumptions or the methodology that's been used, and therefore, if it's a difference in assumptions or methodology, we will share that back with your valuers. If they stand by what they've got, then we have a difference of opinion, and we raise that. In this case, obviously, as you've pointed out, it doesn't lead to a material difference, so it's remained unadjusted to the extent that the council is happy with the value that we've got in there, and we're happy to accept that in a true and fair opinion. But for completeness and transparency, we're raising to your attention what the difference is. Jack, is there anything else in terms of what drove that particular difference that you wanted to share?
No. So that kind of sums it up quite well, I think. Yeah. I would say we raised with our valuation team before in terms of providing a detailed calculation. It's just something that, I'm not, to be honest, I'm not quite sure the exact reason, but that they report to us and they give us a summary of the calculation. They don't provide us those full details, and we're just not in a position to pass that on. It's something we can go back and raise again in terms of looking forward to next year's audit and kind of getting that detailed understanding of those calculations. But it's a further conversation we have to have with our valuations team.
I think you do need to have the conversation, because I think it's quite an unacceptable situation that you have your so-called internal experts who are not prepared to articulate why they come up with a separate figure or a different figure, whereas, as I understand it, our experts lay out their calculations quite clearly.
I'm happy to go back and raise that question again, Chairman.
Please, I look forward to hearing from you on that subject. Members, any further comments? Ruth.
I just would like to ask whether EY could talk us through their page 31, our page 63, on the estimated fees for this year, the total fee for this year being 58.9 compared, or estimated fee, compared with 38.6 the previous, sorry. Yeah. Sorry, I'm saying this wrong. The estimated fee is at 58.9 compared with the scale fee 38.6. And I presume that's down to the COVID-related costs. So I'd just like to understand what's going on there. Thank you.
No problem. So just to be clear, this was it's actually not to do with COVID. It's a separate exercise that was obviously previously mentioned at the July meeting. In light of the changes that have happened within both the sector and within the profession, as you know, the fees are for all councils within the public sector audit appointments regime are set by them, and so we were taking into account all the different elements, so the different moving parts that related to delivering an audit now in the local government sector. We felt there was a need to re-benchmark or re-baseline the fees for that, and we took that to PSAA. PSAA obviously as the appointing body and the fee setter, they asked us to go away and calculate for each individual audit that we do what we felt the cost was, and this is to do with, and it links to the Redmond review for those who are aware of it. The Redmond review is reported last month was very much to try and address the sustainability of local audit in the medium to long term, and part of that is around making sure that the volume of work that is now required, given the changes that we've seen in as I say, in both the sector and the profession, that is addressed through the fee structure and the way that firms are engaged. So the amounts there were the estimated fee based on our recalculating it for the profile of Horsham as an individual district. As we noted, we've discussed that with officers. I appreciate, given the significant difference that people will have a reaction to that. We have tried to explain, in terms of the discussions that we've had, we've tried to explain our rationale behind it. Ultimately, it's for PSAA to opine on what the fee should be, and those conversations are ongoing.
So just to follow up on that, I obviously should have looked back to July, and I apologise that I've obviously failed to remember all of this. But this is, as I understand, it's in a longer term sort of trend of the audit fees having been declining substantially with the increased sort of automation and so on that's been going on. So is the reason that it's looking high for us because we are different and some other people are getting a reduction, or is it that everybody's being revised upwards?
The revision is upwards because the underlying cost of delivering audits has increased considerably based on the regulator's requirement and some of the bits we've already touched on in terms of especially around pensions and valuations and the work required in order to deliver you a robust audit opinion. Relatively, without betraying any confidences, the increase for Horsham is relatively small comparative to some of the other organisations within the local government sector.
Thank you. And can I just ask the officers whether they have any comments on that?
Well, I'm going to pitch in first, Ruth. When I was first involved in this audit committee, I think the audit fee for Horsham was somewhere north of 100, like 120. But I'll now let the officers go. I think that's you, Jane.
I think it is. I'm just thinking what to say. I would have preferred that the prices that came in with the PSAA had been realistic than that we got to this situation where they appear to not be realistic and we're now having to negotiate everything upwards. I've sat in on one of the Redmond reviews presentations from Tony Redmond, and it was interesting, and there is no doubt, and I've been talking to Dom about it because he's got friends still in the sector, as that's where he came from. And you know, the pressure on external auditors of both the complications and indeed having to do the audits at the same time as the NHS audit, so all their work falls in a very short period of time, has caused some of these problems. And they're not just with us, they're nationwide. So as the auditor says, we're not out of line with others, if anything, reflecting a fairly solid base. You know, we're probably on the low side for this, but there's no doubt we will be looking towards in the future having to pay more again. And I would hope to see some revisions in the market that would perhaps allow more choice. And Redmond has of course recommended that there be a new, not a new audit commission as such, but a new controlling body.
New oversight.
That's it. And we don't know what that'll look like. We don't actually, I don't think I even know how it's going to come in. At the moment, it's just a review report. But there will be change, because what can't continue is trying to produce all accounts audited by the end of July for the NHS and local government, which really isn't deliverable. And I believe, from my discussions with Dominic and him with some of his former colleagues, that some of the firms are just hemorrhaging staff at the moment. The pressure that it causes, they just don't want to do the work anymore, even in current times. So
yes, it's strange. Yes, it's strange, given, as Councillor Ritchie said, the very, very steep downward slope on costs that there have been going on in recent years, to then suddenly have this sort of pull up from the dive and start going up in such a dramatic way. But thank you for your explanations.
Glenn, do you want to come in on this as Chief Executive? And then I'll make a final comment.
Sure. Jane's much more expert than me, but what I would have phrased it maybe slightly differently. I wouldn't definitely not have said in front of the auditors that I think our fee is low. I think the efficiencies and the risk profile of the organisation means they've been able to do the work much more cost effectively. But that's just a nuance.
Yes, I suppose there's two observations. One is, I think you could express some dissatisfaction with PSAA, and Jane, if you nod your head in agreement, if you agree that they could actually be part of the issue here. The other part of the issue, it seems to me, is talking to a friend of mine who's the managing partner of one of the larger accounting firms. He was explaining that the Financial Reporting Council were in to see their senior team. And basically we're saying, we expect you to be doing this amount of work every time you get involved in an audit. Whereas I think the audit firms may well have taken the approach, oh, well, because that's what we perceive to be low risk, we're going to do absolutely minimal amount of work. And we're now finding the external regulators are saying, based on our experience of audit failures, because that's where it will be driven from, firms need to be doing a minimum quantity of work to enable them to form an opinion. And I suspect that also needs to be taken into account. Ruth, does that give you enough feedback to answer your question?
Yes, plenty. Thank you, everybody.
Okay, very good. Andrew, anything else to say on your report?
No, I other than to say thank you to Dom, Sam, Julian, and the Jane and the team, and thank you to Jack and the EY team, the rest of the EY team as well. As we said back in July, and we've sort of already inferred a couple of times today, it has been an extremely unusual year, and there's been a lot to cope with, both in terms of the council and making sure that the council did what the council needed to do, and obviously from our perspective, making sure we get the audit done in advance of what was an extended deadline to the end of November. So so if we could note thanks to everybody involved for doing that and getting us to a position 6 weeks in advance of the end of November.
Very good. Tony, you wanted to pitch in.
Yeah, sorry, Chairman. It's really a housekeeping matter, but I note that section 3, the audit report, is headed up draft audit report example only. I assume before the final report is signed off, that heading will be excised from the report.
Andrew.
Yeah, if I could just explain, thank you, Councillor. So the final wording of the opinion is subject, all our opinions at the moment are subject to internal consultation to ensure that they are robust. At the point of writing this for paper submission, we were still in parallel going through that consultation process, so we had to head it up draft. Actually, I can confirm that the wording will be identical to what's contained in there, obviously replicated in the statement of accounts that Dom has already talked to.
Thank you, Chairman. Thank you.
Very good. Therefore, it seems we have nothing further to say in relation to the external audit. We'll take item 8, which is the statement of accounts. The changes have been explained to you, and we spent quite some time back in July reviewing these accounts. So we're invited to receive and approve, recommend for approval the audited statement of accounts and receive and approve the council's letter of representation to the external auditor, both of which are printed in this evening's meeting papers. Does anybody have any final points to make, please? Or can we take those as both approved? Members?
Approved.
All content?
Content, yeah.
Very good. Then in anticipation of that, I can tell you that I pre-signed all of those documents prior to my departure. I'm hoping, Jane, you've received them in the office.
I have, thank you.
Very good. So can I take it, Jane and Dominic, that you now have everything you need from members to now finalise these accounts and obtain the auditor's signature? That is correct, isn't it, Jane? Yeah, I think you said yes, although you are muted. So that being so, we go to item 9, urgent business. Since we've got the Chief Executive here, if anybody wants to ask him any questions, now's a good time. And I'll give you some latitude as to whether it is or isn't urgent.
Thank you for that, Chairman.
Looks like you're getting off scot-free. It doesn't appear that any members wish to speak or ask you any questions. So on that basis, can I just echo the thanks that I think given back in July, but also today to our own team, to Jane, Dominic, Sam, and Julian for getting us to the position we're in today. Splendid job. And thank you, Andrew and Jack, and your team for likewise getting us to the position we are in today. We can put this one behind us and move on to the next challenge. Thank you very much. I declare the meeting closed. Joe, are you able to wrap everything up for us?